Hey, what's up, my people? My name is Alex Moredi, Director at Forex Concepts. So in this video, we'll be talking about market structure, a most common used concept in Forex trading, but most people get it wrong. So I'll be taking you on understanding the market structure and telling you why it is important for you to understand the market structure, and as well showing you practical bit of it from my charts or from my PC so that you can understand and utilize it correctly in your Forex trading journey. Without wasting much time, let's jump straight into it. Okay, so the concept of market structure is really important and is also a common concept in Forex trading. So when you're talking about the market structure, we are talking about how the market moves basically. So as you can see from my illustration here on the screen is that we have a phase of an uptrend whereby the market is making higher highs and higher lows. So as you can see, if I highlight here, so this is a low, this is a higher low, this is a high, this is another high, which is higher than the previous one. So in most cases, when the market is in an uptrend, we will be making higher highs and higher lows. And anytime the market breaks the previous high, then it becomes a higher high. And now we have another phase where the market lacks, a clear direction, and this is what we call the consolidation. So for instance, as you can see here on this box is a phase where the market is majorly not moving in any particular direction. So we will have when the equilibrium, or rather when the movement of the market, there is no strong buys and there is no strong sells. So there is a tug of war between the buyers and the sellers. So therefore it means that they will be at almost equal to each other, and at this point the market will be in so much confusion because, as you can see, the market is not moving in any particular direction. Then we will have another phase, which is now the downtrend, where the market is making lower highs and lower lows. As you can see here, this is a high, this is a lower high than the previous one, and anytime also the market breaks the opposing structure here, is when we will we will have a new lower high. So the market is basically making lower highs and lower lows. Sawa. So now I will now, one thing that you need to understand is that in this particular case, where we are having the market structure, is that we will be having the impulse move and the correction. So in this case, in an uptrend, we have a move upward, then the market pulls back. And for the people who already know or understand the concept of smart money concepts, this is what most people call the BOS, or the break of structure. So the people who trade SMC will call this the break of structure. So anytime the market breaks this high, then that will be another BOS, and another one here, this will be another break of structure. So but now when the market shifts in direction, when the market is changing, how do you get to understand when the market is changing direction? Anytime we have the last higher low broken, then it means that the market will have a change in direction, which also they call the change of character. For me, is just a classical price action understanding of the market structure. I call it a change of market direction, but the SMC guys, or rather wale wengine wanaitwa VP, SMC and ICT guys will call it the change of character. So that is when now the market breaks the last lower high. For instance, if the market breaks this point here, then it becomes that like the last higher low has already been broken, and therefore the market shifts in direction. Therefore we will be anticipating for the downtrend. So anytime you are having this kind of structure, then you need not to get confused, because with the understanding of the market structure, you'll be able to tell when the market is in an uptrend, when the market is consolidating, at the same time when the market is doing a downtrend. So of importance to know is also when to buy and when to sell. So anytime the market is making higher highs and higher lows, then it means you will be buying on these particular pullbacks. So anytime the market is making these pullbacks, then you want to get into what? Into the market when the market is making these pullbacks. So and these pullbacks, you can, you know, jump into them in different ways. Maybe you can use the moving average, you can use the concept of support and resistance, you can also use the concept of supply and demand. So that is an explanation that I'll make in another video, but at the moment I just want to take you through this concept of market structure into the charts itself from one particular pair. So we are actually not going so far. We will be looking at this card JPY. So I want to clear everything on the charts so that it can be clean for you. Then we will proceed to or rather to observe the market structure from from the, you know, from the chart practically. So as you can see, anytime the market is making this kind of move, you know, the market is in a downtrend, therefore it means the market is making what? Lower highs and lower lows. So this is a classical, you know, illustration of when the market is in a downtrend. Now sometimes also you will find there are sometimes that the market will like break the last lower high to signify like it's changing you know, the direction, but in some cases they are just internal structures of the market. So so you need to also understand that. So this is a classical illustration of the downtrend. Now the uptrend is I can show you the uptrend. So this is the uptrend when the market is making what? Higher highs and higher lows. Higher highs and higher lows. As you can see, this is a classical illustration of what? Of an uptrend. So as you can see, anytime the market breaks this structure with this impulse move, we have a correction. Impulse again breaking the what? The previous high or previous structure, then pull back again. Anytime we have the break of structure or the BOS, then again we have a new high that has been formed. So with this kind of movement, the market is making higher highs and higher lows. Now I want to show you also the what? Now, for instance, in this case, as you can see, there was a what? There was a change of this another high. Now, at this particular point, as you can see, the market is also okay. At this point, as you can see, this is the last what? This is the last. We can identify this as the last higher low that was formed in the market. So, and once we get a break of this what the last higher low, then it means now that the market has shifted in direction, or the change of character has happened. So at this point we have this break, then we start looking for sells, or rather we start looking for the opposite, or rather we will be in a change of direction of the market from uptrend to a downtrend. I hope this has been clear for you. So, and I just want to also show you a phase where the market is in consolidation. So I believe the consolidation bit is not so complex for you. So, but it's also good that we, you know, we highlight it when the market is making move no particular direction, or rather when the market is in a consolidation. So usually when the market is in a consolidation, for instance here, you will see like for instance all this zone, the market is not breaking the highs, rather, and also the lows and also not breaking. So you will see like it's just confused, like hakuna momentum kwa market. But anytime we break out of the consolidation box, now the market starts making new higher highs and higher lows. So this is a classical illustration of also when the market is in a consolidation. Now we'll also look at another pair. Let's look at another pair, USD JPY. USD JPY. So, and note that the market structure happens in any time frame. Sometimes you will find like the market structure, or rather when the market is trending in 1 hour, even down to the 1 minute, you will also find these classical market structure movement happening. So for instance, in USD JPY, this is the current, almost the current, what the market has been doing for the last 1 week. So you can see from the 1 hour time frame, you can see the market is making lower highs and lower lows, right? So as we have said, is that the market, anytime the market is making lower lows and lower highs and lower lows, then it means the market is in a what? Is in a downtrend. Now we have to identify the last lower high. Sawa sawa. So we have to identify the last lower high, because that is a very important point, whereby if the market breaks the last lower high, that is when we have a change of trend. So for instance, in this down 1 hour downtrend move, or rather this all move from here to here, the ones the one that I have highlighted, this move here. So we mark the last lower high. This is a place will be of much interest, because once the market breaks above that last lower high, which is this one, then that is when we have a change of what? Change of character, or rather, that now we expect the market to continue making higher highs and higher lows. And of course, if you are looking to maybe make a buy, sometimes the market will also pull back to this level before we can continue with this kind of movement. So at any given point, we have the break of the last lower high or the last higher low, then you know that the trend is changing. And as I have said, that this can happen in any in any in any time frame. So it depends with also the time frame that you are trading. So I hope that this concept we okay. So I hope that that is clear for you. As I have showcased and illustrated from my charts, market structure, understanding the market structure is very simple. You only have to understand when the market is in an uptrend, when the market is in a consolidation, and when the market is in a downtrend. So understanding these three phases of the market, then we'll be able for you to ensure that you get your entries, or rather you get on the side that the market is moving in the direction. When the market is in an uptrend, you want to be buying on the pullbacks. When the market is in a downtrend, you want to be selling again on the pullbacks. And at the same time, when the market is in a consolidation, you either be buying the lows, selling the highs, or staying away from the market at all. So I hope that video has been educative for you. Let me know on the comment box. So see you on the next video.